Hi everyone, it's always nice to meet you on a new episode of Gold Price Prediction. Before we start this episode, this is an invitation for you to join us on our free Telegram room. The link is in the pinned message and the description of this video. This is a completely free access, okay? If you are a professional trader who seeks perfection and accuracy, you can also check out our interactive trading room, which is the full game, the full game. I guarantee you will make money. We don't want your money if you don't make money. You will get commentary, market reports, you will get trading signals and setups, plenty of them. If you want to join us, you can drop us a message on the WhatsApp right here, or you can go through the freemium and apply for the premium. Now let's start the video as usual with the numbers. We are going on the closing basis of Friday. So the last closing price was $4,831 per ounce. This week the low was $4,644 per ounce and the high was $4,891. $4,891 per ounce. Now look at the 4 hours chart. This is something very nice. For me, it's very nice. It's bullish, at least short term, because this is making a cup. This market is making a cup. It's obvious by the eye, okay? Now I know it will be hard for gold to climb the coming $200, but it's somehow most certainly gold is heading to the $5,000 per ounce. Now, fundamentally, the opening of the Strait of Hormuz is changing the whole game because the prices of oil will go down, the inflation will come down, and the market will start to price that the Fed may cut the rates again. And this is a good thesis for gold. In general, gold is supported because central banks and governments are buying into the gold. Stay with us.
Like, share it with your crew, and hit subscribe. You don't want to miss what's next.
Let's check what's driving the markets in the next session and this week. The economic calendar is up next.
On the economic calendar for the upcoming week, starting of Monday, the 20th of April 2026, all the way up to 24th of April 2026, we have a very light news on the calendar from the United States this week. Mainly you have Fed manufacturing index, you have the initial jobs claims, which is a recurring event, and we have also Michigan consumer sentiment and expectations. That's all. Stay with us.
Imagine being inside the market as it moves, not only watching, you are participating. Welcome to the Goldcoach Interactive Trading Room, a private space where traders get live setups and real-time answers from the experts. This is interaction, not a signals group. Daily reports, constant updates, and insights that keep you ahead. Join now for just $100 a month.
Cut your losses immediately. Join us and experience the market the way pros do.
Win every single trade with Goldcoach Trading Advisory.
If you've made it this far and you're not subscribed yet, that's almost criminal. Last station, traders, stick around and let's see how we're going to play this one.
Welcome back to the trading strategy, the most important part of our video. Before we start, let me guide you through the methodology of analysis, how we do the analysis and how we are backing up the numbers that you see in front of you. We do follow the ranging market theory, by which we identify what is going to be the trading range of the week, which we expect it to be 4,600 to 5,000 in the upcoming week, starting from 20 up all the way up to 24 for the 24th of April 2026. The most important number of all is 4,850. We want to see gold closing one day above this number, to open the upside, to make us go to that spot which we want, which is $5,000 per ounce. Now this market is highly bullish, but now we are at the top. Now market is challenging the falling trend line, as you see in front of you. So from a buyer, I can buy on the market 4,830 because I think the market most likely will gap up. You will have 4,800, the round psychological number, and then you will have all the way up to 4,760. Any close below 4,750 will invalidate the whole bullish thesis, and we will enter some sort of a pullback, a lengthy pullback. Now, if I'm a seller, I look at 4,860, I look at 4,900, and then I look at 4,950 to 4,960. In conclusion, the factors that were affected gold and caused this massive sell-off, which is the war in the Middle East between Iran and the USA. Now it's fading out and the Strait of Hormuz is opened again, so there's no energy crisis, so gold
You
should
feel it, don't
turn
you?
around.
That pulse when gold
I think
starts
that's
to
what we'll see
move.
tomorrow.
What if you could sense every shift before the world reacts? Before anyone else is aware, you are already in the perfect setup. Step into the Goldcoach interactive room where trading isn't luck, it's accuracy and timing. Real-time signals, sharp analysis, and non-stop commentary. Noise. This is clarity. It's Goldcoach interactive trading room. Win every single trade with Goldcoach Trading Advisory.